Hey traders, how's it going? Hope you're having a good week. We just came out of a very profitable trading week. Okay, as you can see in our Telegram right here, we came out with about 318 pips in profit being generated. Okay, all from our signals. So hopefully you took advantage of our signals, right? Follow it and made some money. Now, this week hasn't been quite easy. Okay, it's not easy to make money during this kind of weeks because we had FOMC. But if you actually went ahead to cut your losses fast, as you can see, we cut our losses pretty fast. A lot of the trades, we cut it at like 9 pips loss, 15 pips loss, 3 pips loss, 14 pips loss, and so on. This is how we actually make money. Okay, we control our risk very aggressively. Okay, I know that there are many Telegram channels out there, other educators, other signal providers who show you results like 5,000 pips profit in a week and stuff like that. But what they don't show you is that the stop loss that they are using is very wide. In our case, we're only using a stop loss of about 30 pips on average. So if we are getting about 318 pips in profit with an average risk of 30 pips, then that's about 1:10 RR, okay, risk to reward. So please just bear that in mind when you're following other providers. Okay, you don't have to follow us, but just note that risk to reward is very important when you're looking at the signals that we send or any other signal providers who send it to you. Now, with that said, I want to get into the main part of today's video, which is the market analysis for next week. Okay, so if you're new to the channel and you haven't yet watched any of my market outlook videos, right, please do subscribe to the channel because I upload these kind of market outlooks videos every single week. Okay, we've been doing this every single week on a weekend to prepare you for the new trading week ahead. So make sure you join us. Okay, make sure you hit the subscribe button, and if you have not yet joined us on Telegram right here, this is a free Telegram channel and you're missing out a lot if you do not join us there, because we send out our signals that we trade ourselves to you for free. Okay, so again, this link is in the description down below. Just join us right there. Okay, so right now, what I want to do is I want to break down the market for you. I want to go through this various currency pairs right here. Okay, I cannot go through every single currency pair, but I think these are the major currency pairs that most of you trade anyways. So I want to show you the key levels to focus on and the bias towards whether you should be going long or you should be going short. Now, as always, I'll be using the 3-day trading guide to analyze the market, or rather the MPE trading strategy that is taught in the day trading guide. Okay, so I'll be using M for market condition, P for price level, and E for entry. This is a very simple way to trade. Okay, it's very beginner friendly. Beginners can use this and it's still very high probability if you follow it to a T. So what I'll do is I will run through the market, okay, using this step-by-step process MPE. Now, if you haven't gotten this day trading guide, again, it's free. I'll leave a link in the description down below. Please input your email. Okay, we've seen that a lot of you actually put in a fake email and end up you don't receive it. Please put in your real email because we are going to send it to your email. So if you do not put in your real email, then obviously you're not going to get it. Okay, so let's look at the Forex Factory Economic Calendar first, then I'll jump into the charts. Right now, it's Sunday. Okay, so today it's the 22nd of August, and we are preparing for 23rd August to 27th of August. Okay, so next week, we don't really have much high impact news. Okay, we have this German in PMI, and right here you have this GDP. So I think that these two events are the main news. Okay, and of course Jackson Hole. So if you are new to trading and you do not know what Jackson Hole is, it's basically a conference. Okay, so normally we hate conferences, but for Jackson Hole it's a little different. Okay, based on my experience, Jackson Hole, it's not so volatile because you can see it's a whole day event. So the market usually doesn't really regard this much, and you can see that day 2 is on Saturday where the market is closed. So for this reason, I do expect the market to be pretty smooth sailing from Monday all the way to Thursday. And of course, on Friday, you have the chairman speaking, you have Powell speaking. So probably the market is going to be nice to trade from Monday, Tuesday, Wednesday. Then maybe Thursday start to taper down as the market prepare for Friday's conference right here and a speech right here. Okay, so that's my prediction. Again, this is just a very generic prediction. Ultimately, we still need to look at the charts, but it's always good to go into the charts and have an expectation of how price might move. Okay, because if it's not going to be a smooth week, then you don't want to be too aggressive. You don't want to try to chase after the market. Okay, so hopefully this is clear. Right now, what I want to do is I want to move into the charts. So right here I have DXY. DXY shows the trend of dollar. Okay, so of course if this is going up, then dollar is strong, and then you want to look for buying dollar crosses such as selling euro dollar, selling pound dollar, and so on and so forth. Now right here I'll be using MPE trading strategy as I explained earlier. So M stands for market condition. Okay, so at a glance you can see that DXY is actually in an uptrend because we have a high here, we have a low, we have higher high, higher low, higher high. Okay, this is a higher low as well, which has not been violated. Okay, so for this reason, DXY or dollar is still bullish. Okay, and I think if you look at the day trading guide with which my team has written right here, you can see that if the market is in an uptrend, then you should be looking to buy only. Okay, it's pretty straightforward. So if this is bullish, then you want to look to buy. Okay, you shouldn't be looking to sell. Now the issue is that price is a little high right now. Okay, and it just broke above this resistance, which I expect to act as support. Okay, so price is a bit high now, and we have this shooting star on Friday. So what I do expect is that price will slowly retrace back down. Okay, and then if it finds some form of candlestick pattern here, if you see a form of candlestick pattern here, like a hammer and engulfing pattern or piercing candle, then you can go ahead to take the trade and buy with the expectation that dollar is going to strengthen. Now, one thing to note about DXY is that this right here, it's what is known as a rally-based rally. Okay, I think I have a video of this on YouTube. Okay, one of the videos I previously did, I did teach about the concept of supply and demand. Okay, this is actually a demand zone right here. Okay, and again, if you do not know what I'm talking about, that's totally fine because this is a little more advanced. Okay, it's not for everyone, but what I'm trying to say is that this level right here is a very strong level. So price is right here now. Just be patient, wait for price to retrace here, look for a candlestick pattern, and then you can go ahead to buy DXY. Okay, anyway, most of you guys will not be trading into DXY. Personally, I also do not trade into DXY, which is why we want to look at the other crosses, the dollar crosses. Okay, so just bear in mind that dollar is strong and we want to be buying dollar. So moving on to euro dollar. Okay, this euro dollar, let's look at the market condition first. Okay, remember we always stick to MPE. Okay, we always stick to the same formula. If you want to have consistent results, then you need to stick to a consistent framework. Okay, so right here's a low, here's a high, lower low, lower high, lower low, lower high, lower low. Okay, so market condition is bearish. Okay, you shouldn't be looking to buy. Okay, especially if you are a new trader, you're still struggling, you're not profitable, please do not buy. Okay, please do not buy, at least on a daily time frame. Now price has just broken below this swing low. Okay, if you just switch over to the line chart, you can see that price broke above, retested it a bit, but right now it seems like you want to retest it one more time. Okay, so just wait for it to retrace. It might retrace to here, or it might retrace up to here, okay, which is the previous swing low. We do not know, but what we need is we need a candlestick pattern to show us that it is time to sell. As of right now, we do not see a candlestick pattern. Okay, this is like a piercing candle, bullish one. What we need is we need a bearish candlestick pattern. Okay, so remember we have the market condition bearish. We have the price level, which is this level and this level. Or rather, I would say that this is a zone of resistance. The last thing that we need is we need an entry trigger. Okay, entry which I spelled out in the day trading guide right here. Okay, so just be patient, let price retrace higher. If we get a signal right here, we'll shut it down, and then probably we can target here as the next support. You can see it's pretty clear. This is a swing low, so if you sell here, it's probably going to be quite high, and there's a lot of margins, or rather profit margin, for price to drop down lower, and you can make some nice profits. Okay, now one more thing that I want to highlight is that there's actually a descending trend line. If you just connect this high to this high, then you can see that this zone right here coincides with the trend line. So this is going to be a very high probability setup because you are trading with the trend and you have confluence. Okay, confluence means that you have multiple factors pointing towards the same level. So in this case, we have the structural level, which is swing low here, or this swing low here, and the trend line as confluence. Okay, so this is a very, very strong level. Please focus on this currency pair next week. I think this is going to be a good setup. Again, if you do not have time to monitor the market, or you do not know you're not good in identifying candlestick pattern, make sure you join us on Telegram here, because we do send out the signals on our Telegram channel for free. So if you're a YouTube subscriber and you haven't downloaded this, or rather you haven't joined us on Telegram, right, you can see right here that we send out our signals right here. Okay, so you're definitely missing out a lot if you do not join us on Telegram. Okay, now moving on to pound dollar. Pound dollar is not so clear, so I don't recommend that you trade pound dollar next week. Okay, so let me just break it down for you right here. Now, pound dollar, previously when price was coming up, I said that the market was bullish. Okay, however, you can see that price just started selling down and down and down and down. Okay, so in this case, I would say that the market condition is probably more bearish right now, because if you were to look at the sub waves or the micro waves, you can see that this is a low, this is a high, lower low, lower high, lower low, lower high, lower low. Okay, now this low hasn't been broken yet, so this is an important thing to note, because this level is a strong level. Just look at how, how strong price rally of this level right here. So right now price is parked at support. However, we are in a bearish market condition, because you have the lower lows and lower highs going to the level. However, it's here, so do be patient. I expect price to probably just bounce up and down somewhere here, then eventually break. Now, this level right here is so very important, 1.368. You can see that historically this was a strong level, supported here, and here was resisted and resisted. Okay, so what might happen is that price might just consolidate within this range and then eventually break down. Okay, then when it breaks down, what I'm expecting is that price will pull back towards this level, and then we wait for a candlestick pattern right here, then we'll short it down. Okay, that's how I would trade it. I don't recommend that you trade into this entire zone, because it's a very tight range. 1.362 and 1.368 is just 80 pips. Okay, by the time you get a confirmation candle, let's say you get a bearish confirmation candle, probably you are selling at maybe 1.3645, and that's very close to support already. So I would recommend that you wait for this level to be broken first. Once it's broken, be patient, wait for the retracement up, look for a candlestick pattern reversal here, and then you can take the short down. Okay, anyway, right here to here there's a big space. Okay, there's a big space of about 230 pips. Okay, let me just measure it and make sure I got it right. So here to here is about 220 pips. Okay, there's about 220 pips of space, so don't have to be in a rush to short it. Just wait for price to break down and retrace up. Okay, now moving on to dollar franc. Dollar franc is actually the opposite of euro dollar. So of course, if you are bullish on euro dollar, then normally you will be bearish on dollar franc. Okay, in this case we are bearish on euro dollar, so we'll probably be looking to buy dollar franc. Now dollar franc is in a bullish market condition, because we have an inverted head and shoulders pattern. It's very clear, this pattern. You can see that there is the left shoulder here, there is the head here, and there is the right shoulder over here. Okay, it's symmetrical, which is a good thing. Okay, symmetrical means that it's exactly the left shoulder equates to the right shoulder. Okay, non-symmetrical will be something like let's say the right shoulder happens lower than the left shoulder. Okay, so this is a symmetrical head and shoulder pattern, and on this right shoulder here, this is actually what is called a morning star pattern. So you have this doji, and then after that you have the confirmation candle. So this level is looking like it's going to hold. Now the problem is that we are in the middle of nowhere right now. So let's say if on Monday you want to go long, you're actually trading in the middle of nowhere. Okay, because if this is support, this is resistance. If you buy here, then you are buying in the middle of nowhere. Okay, so either wait for price to retrace back here with a candlestick pattern and then look for the long, or if not, what you can do is, if price just keeps rallying, what you can do is you just wait for price to break above this level. Okay, break above the neckline. Okay, this is the neckline. This is the left shoulder, right shoulder. So this will be the neckline, and you can see that this level right here is actually a strong level, because you have this level here, this level, and you have this level that was previously a resistance, and also here, which was support previously. So once we see this level broken, what you can do is you can just wait for a retracement back down here, look for a candlestick pattern, then you go long. Okay, again, from here to here there's a big space, so you don't have to really be worried about your risk to reward. Okay, let's say if you were to buy something like this, depending on how the candlestick pattern forms, you do it something like that, you can see that the risk to reward is pretty attractive. Okay, anything above 1:1.5 is a good risk to reward. So just be patient. Right now price is in the middle of nowhere. Okay, if you can, try to buy here. If not, then just wait for price to break out and buy here. Okay, that's how I would trade it. Now Kiwi dollar, it's a bearish market condition. Okay, let's look at it. So you can see that this is the low, this is the high, lower low, lower high, lower low, lower high, lower low. Okay, in fact, if you draw this trend line here, you can see that this sort of flag pattern, okay, if you draw it like that, okay, this flag pattern was broken, and then after that you get an impulsive movement down. Okay, 3 big candles, 1 2 3. Okay, now price is in the middle of nowhere now. Okay, support is, the next level of support is 0.6770, which is right here. Okay, this is not a difficult level to get because you can see that this was previously resistance. It was almost here, resistance, and right here and right here. Okay, so what I'll do is I'll use the recent price data. Okay, this is the more recent data. I prefer to use the more recent data over this level because this is more recent compared to this or this. Now price is in the middle of nowhere, or rather it's very close to support, so I do not recommend that you chase it. Okay, especially when we have this Jackson Hole next week, and you know, this Powell speaking. So I do recommend that you just be patient. Okay, if it doesn't retrace here during the week, then focus on the other currency pairs. Okay, there are a lot of currency pairs, there are a lot of other trade setups. There's no need to chase the market and, you know, try to sell here and target here to take profit, because you're very close to support already. Okay, I'll just look to sell here. Again, very straightforward. Market condition is down, price level is here. Just need a candlestick pattern right here to go short, and you should be fine. Okay, now moving on to Aussie dollar. Aussie dollar, same thing as Kiwi dollar, because you know, Aussie dollar and Kiwi dollar usually moves in the same direction. Again, the market condition is bearish because you have a low here, high, lower low, lower high, lower low, lower high, lower low. Okay, nothing too complicated. Now, what we need is we need a price level to go short. Okay, similar to Kiwi dollar, right now, on Friday we have a pin bar, and this is happening in the middle of nowhere. Okay, so the next support will be this level right here. Okay, 0.70, which is very close to the round number of 0.70. Okay, 0.70 is obviously a strong level because it's a good, strong psychological number of 0.7. Okay, so definitely you expect support to be there. Now you can see here so that there is support, there is support, there is support right here. So now price is in the middle of nowhere, so you do have to be patient. Just be patient, wait for price to retrace higher towards this level, which is a strong level as well. This was support, this was resistance, resistance, resistance. Okay, so just be patient, let price retrace to here, look for a candlestick pattern, then you can shut it down. Okay, again, I do not know if we will get this next week. Okay, but this should be your plan. Your plan shouldn't be to short here and then chase the market. Your plan should be to wait at the best price level to get in with a tight stop loss. Okay, now by the way, do not be tempted to go long on this candlestick pattern, on this pin bar. Okay, a lot of rookie traders, what they do is that they see a candlestick pattern, they say, oh, this is the bottom, this is the market bottom, I want to be a hero and I want to go long because I want to catch a market bottom. And what happens end up? The market just starts selling down, and you know, it just keeps moving down like nobody's business. Okay, please, if you are a new trader, you're still struggling, please do not be a hero, right? I really want to drive home this point. Please do not go counter trend. Okay, it's not for you if you are a struggling trader. Okay, trade with the trend. Now, one more thing I just noticed on a Kiwi dollar is that this is right here actually a drop-based drop pattern. This is actually supply. Okay, if you watch my other YouTube videos about supply and demand, this is actually a supply because you have a drop-based drop. So this is definitely a very strong level which I'll be looking to go short at. Now, if you do not know what I'm talking about, you can check out that video, right? I don't really remember which video it is, but you probably can find it if you just do a little digging. Okay, but anyway, you don't really need to know that. All you need to know is that this is a strong level and I'll be looking to go short right here. Okay, just wait for a candlestick pattern over at this region right here and you should be fine. Now not Kiwi dollar, sorry, dollar CAD. Okay, dollar CAD is bullish. Market condition is bullish because you have a high here, low, higher high, higher low, higher high. Okay, on Friday we had a very nasty pin bar, so people who bought are probably in the red right now because it spiked all the way to this level right here. Okay, this level is not difficult to get because if you just look back historically, you can see that this level was strong. Right here you have a pin bar, and right here you have another long pin bar. Okay, so it's not difficult to tell that this level 1.2926 is a strong resistance level. Now, I don't expect price to just start selling down towards this level right here, okay, which is the recent swing high. Okay, a lot of people, what they will expect is that price will just retrace lower and then start looking for buying opportunities here. Now, I don't think that's going to happen because I see that this right here is a fake out. So I do see that this entire movement up is probably going to be a fake break of this swing high. Okay, so if that's going to happen, then naturally the market's going to sell down lower, so that people who buy here or even people who bought on this candle right here, they're going to get stopped out at break even or with a loss. So the market's always out to take your stop losses. You need to understand that. You need to understand where the stop losses are so that you do not get caught in this kind of movement. So with that being said, I expect price to do a deeper retracement towards this zone here, which is actually the, let me just change the line chart, which is actually the high here and this high right here. Okay, now this level right here is very strong, so because we have a nice confluence with the trend line, just connect this low to this low, and you can see that this right here sits nicely on the trend line as well. So by the time price retrace here, probably it will align with the trend line right here. Okay, so that's how I would trade it. Now again, this is a demand zone. Okay, if we just look at this right here, this candle right here is a demand zone. Maybe I just delete it so it's clearer. It's a rally based rally, so this is also a very strong zone. So this is going to be a very high probability setup. Okay, this is what I recommend that you focus on next week. Okay, whether price actually retraces here or not, I don't know. Okay, we have to see, but this is a very strong zone to go long. Okay, so I'll be looking at this. If we do get a signal, I'll send it out on Telegram, so make sure you join us right there. Now let's move on to dollar yen. Dollar yen is a bit tricky. So previously I did talk about this resistance. Okay, in the previous market outlook videos, I did say that this level right here is very strong. Price, in fact, on Thursday, right here, it spiked this level again, and then after that, it came back down here. Okay, so it's pretty nasty price action right here because price is going nowhere. So if you buy or sell, chances are you either are in a floating small position, small loss, okay, or you probably got stopped out. Now, dollar yen, I still see it as bullish because this pattern is not being violated. You have the left shoulder here, you have the head, and you have the right shoulder over here. Okay, so the only issue is that this level right here is very strong. So right now price is in the middle of nowhere, or you can say that it's lower to the base, but I do think that it's not worth going for this, because let's say if you buy here and maybe you put your stop loss below this level and you target something like this, you can see that your risk to reward doesn't really make sense. Okay, so I don't recommend that you trade this, but I just want to highlight that this level here is strong. Okay, this level here is also strong as well. Let me just draw it for you. Okay, so this entire zone is strong and this entire zone is strong. So if you really want to trade this, then try to buy as close to this level as possible and try to sell by the time price hits here. Okay, I don't recommend that you sell here even though this is resistance, because the market structure right here, it's bullish. So it's better to go long than to go short. Okay, it's better to buy at support and then hope that this level breaks out. So let's say you buy right here and price comes here and somehow you were lucky and price just breaks above, then you would make a lot of money. Okay, the other way I recommend you trade this, wait for price to break above, look for the retracement down, look for a candlestick pattern, and then you can buy up. Okay, that's how I recommend you trade it. I don't think you'll get this trade next week, but these are the levels that you should focus on. Now let's talk about gold. Gold, it's pretty nasty. Okay, last week, this is Friday, Thursday, Wednesday, Tuesday, Monday. So you can see the whole week, price was just compressed. The price action was like a spring after this big movement down and up. This is just consolidation. Now this level is still holding. This was the neckline. This was the first hit, first top, second top. This is the double top neckline, which coincides with this high, and this high. Okay, so this is a very, very strong level. Now price is still resisted here. Okay, so I do think that the market condition is still bearish because this is a low, this is a high, this is a lower low, or if you were to see it this way, this is a high, this is a low, this is a lower high, and this is a lower low. Okay, so market condition is still bearish. However, do take note that there is this potential level that might act as support. So if I were to go short, what I want to see is I want to see this level broken first. Okay, once this level is broken, then I want to see it being retested, something like this, and then I will go short. Okay, this is how I would trade it towards this level right here. I don't recommend that you sell just because price is here. Okay, let me just zoom in. Don't recommend that you sell like based on this candle. Okay, this is actually an like an engulfing pattern right here. I don't recommend you go short here because this support right here might hold. Okay, so if you do something like this, you can see that the risk to reward doesn't make sense. Okay, again, I always stress the importance of having a good risk to reward. Okay, at the start of this video, I said that there are many signal providers who give you trade signals that have take profit of 20 pips and their stop loss is like 150 pips or 300 pips. That will not make you profitable in the long run. Okay, you want to be profitable in the long run. The way to do it is to have good risk to reward. Okay, at least 1:1.5. So if you take this kind of trades, it's very hard for you to be profitable. Okay, because you need to be right more than 50% of the time in order to turn a profit. Most traders cannot get it right 50% of the time. Okay, it's just a fact. So this one, just be patient, wait for this level to be broken. Okay, again, if we see anything, we may send or may not send, because normally we don't like to send gold signals out, because a lot of you do not know that gold has a different lot sizing. The position size is different from gold, and end up they blow their account and then they write angry emails to us. Okay, so normally that's why we don't send gold signals. But please take note of this level and this level. Okay, and of course this level right here. Moving on to Euro Pound. Euro Pound, we finally got a reversal pattern. Okay, it's pretty nasty. Okay, so this entire movement down turns out to be a bearish trap. Okay, it's a fake out. In fact, if you were to be a bit more observant, okay, if you just switch over to the line chart, you can see that this is actually a inverted head and shoulders pattern, a very small one. So you have the left shoulder here, you have the head, and of course you have the very small right shoulder right here. Okay, it's a little difficult to see, okay, but it is still an inverted head and shoulders pattern. Now, for this reason, I do think that Euro Pound is now officially bullish, because previously we had the low, high, lower low, lower high, lower low, and this right now, this lower high right now is being violated. In fact, on Friday, price closed above this high. Okay, now if you were to look at the micro waves, you can see that this is a high right here, low, higher high, higher low, higher high. Okay, so market condition is bullish. Now what we want to say is we just need price to retrace to a strong level, which will probably be this trend line, which it's the same level as this right here, which is the same level as the left shoulder. Okay, so right now price is a little high. You're in the middle of nowhere. This is resistance, which is the recent high down here, and this is a support. Okay, so if you chase the market, then you are buying in the middle of nowhere. So just be patient, wait for price to retrace lower down here, look for a candlestick pattern, and then you can buy it up. Okay, NZDUSD 100. NZDUSD 100 is in a tight range. Okay, it's nothing too much to talk about this, because you can see that this is a box and price is still trading within the box. Market condition wise is still bullish. There's no reason why you should go short, at least on the daily time frame. Okay, you have a high here, low, higher high, higher low, higher high, so it's definitely bullish. Now you want to buy. Now the issue is that right now price is close to resistance. So again, I will recommend that you just wait for price to break up, look for a retracement down. This is the easiest setup. It's just a break and retest. Okay, just break the high, look for a retest of the level and go long. Okay, anyone can trade this kind of setups. Okay, if you just focus on trading this kind of setups, you can be profitable. Okay, the challenge is that you need to be patient. Okay, most of you are losing money not because these setups don't work or because you don't know how to trade. Most of you are losing money because you're not patient enough to wait for the setup, and even if you are patient enough, you do not manage your risk properly, and you end up go all in on this kind of setups, and then the moment price breaks down, you lose your entire account. Okay, so please do not do that. Please just be patient and please manage your risk. Now moving on to the last currency pair I have for you, it's pound yen. Okay, pound yen is a bit messy. I don't recommend you trade this. Okay, right now pound yen, I would say that it's kind of like consolidating, so I won't say it's more bullish or bearish, even though there is a low here, high and lower low right here. Okay, because this low right here is not broken, and Previously, we had an inverted head and shoulders pattern. Okay, this is the left shoulder head and this is the right shoulder. Okay, so I do not know if this is going to be the second bottom, this first bottom, this second bottom. I do not know, but what I can tell you is that this level right here is very strong. Okay, just look back historically right here. You can see that this level right here is very strong. So right now we're at strong support, and right here is a strong resistance. This level is worth taking note as well, 1.5120. Okay, so I don't really want to recommend whether you should be buying or selling, but I just want to say that price is at support right now. If you really want to trade and you really want to buy here, then just look for a candlestick pattern, but I don't recommend that you trade like that. Okay, I recommend that you stick to the MPE trading strategy. Look for the setups which are clearer, such as this one right here. This one is clear. This one is clearer as well, and I believe this one, okay, because the market condition is cleared up and you have a very strong level right here. I don't recommend that you trade this, okay, but these are the key levels that I would focus on if I really want to trade pound yen. Okay, so that's all I have for you prepared in today's video. I hope you got a ton of value. Right, make sure you hit the subscribe button if you have not already done so. Okay, please go grab the free day trading guide if you have not done it. The link is in the description, and please join us on Telegram if you are a YouTube subscriber and you have not yet joined us. Okay, it's totally free and you're missing out on a ton of value if you do not join us there. Okay, if not, please trade safe, please manage your risk right, and I'll see you in the Telegram channel. Trade safe.